Hello friends, now we have just finished by discussing what is audit, what are the objectives of audit. Okay, then now let us go further. Now the topic is need for audit. So basic important thing is normally we should know that normally the number of entities are increasing in the market, the number of business concerns are increasing in the market irrespective of their size, nature and volume of business. So now very important thing is normally when they do the financial transaction, that transaction has to be verified for its authenticity, and it should also be verified for its genuineness. So in such case normally again we should know that normally why this audit is needed to us and what is the relevance of this particular audit. Okay, let us discuss one by one what is its need and relevance. First thing is normally to obtain the financial position or to know the financial position, of the enterprise. So basically what is important is normally the financial position here refers to how much is supposed to be received to us and how much we have to give it back, or how much is due to the concerned people. The respective entity may be in receipt of the cash by different sources. Maybe some parties have to pay, or some suppliers have to pay, or you are supposed to again receive some interest income, receive some commission income, receive some income from sales. You are supposed to receive some income from the sales we have done for the previous month, which is due or in arrears. So such kind of things have to be received. So these are treated as receipt transactions. Second type of transactions are payment transactions. The payment transactions are those which we are supposed to make the payment, like the payment of rent, payment of salary, payment of telephone expenses, payment of audit charges, legal charges, advertising charges, marketing cost, publicity cost, electricity bill and other things. So all these are payables. The payables are the commitments. These commitments has to be again met on time. So that is very important. So the financial position basically refers to, now again after paying this much commitment, now again what is left over. So how much we are supposed to, and how much we are supposed to keep as reserve, how much we are supposed to keep it as a contingency fund for emergency purposes. All these are very important. So this is something about this. So financial position overall means what is the net financial position of the enterprise after meeting its commitments of the business. That is very important. Knowing the financial position is important also because one side normally again we will come to know how the entity is. Second thing is compared to last year or previous financial year, whether it is doing good or it has to still improve. That is there. And nextly, most important thing is normally whether this financial position is fair enough to again go further, fair enough normally again to improve ourselves in terms of profit generation, improve in terms of wealth generation, improve in terms of creating further assets for the enterprise. So that is also very important. So it's the right of the enterprise to know its financial position, because financial position is determined only when normally when we invest money, when we again see that normally the business is run properly. That is very important. And very important to know the financial position is also because normally again there may be a possibility of some persons cheating us, some persons doing a kind of fraud or fraudulent acts, some persons normally who don't want to see the development of the entity. So in such case normally what it becomes is normally knowing the financial position will make us totally alert. It will also make us normally totally know where the enterprise is moving towards, how much we can expect in the coming year, whether we can reduce our expenses, where we are overspending, where we are underspending. If we are overspending, it is very important to cut down the cost, cut down the unnecessary expenditure. And if we are underspending, normally we should make sure that we prepare a relevant budget and move according to the budget. So whatever provisions are laid down in the budget, that has to be followed. This is one side. Second thing is normally to cross-check errors and frauds. So very important thing is normally any employees in the organization normally may not be trustworthy unless until he proves the same. So in such case normally we should know that there is a moral check on the employee also, one part. So that's why it has to be done. And more important thing is normally we should also check our resources. The physical resource has to be cross-checked with normally whatever is entered in the books of accounts. That is very important. Maybe it's a stock, maybe it is a purchases, recorded, unrecorded purchases, whatever it is. Maybe it's a size of inventory, whatever is there. All these things has to be cross-checked normally along with normally whatever is entered in the books of accounts. So this will reduce the errors. And secondly, it will also help us to reduce the fraud. Why? Because normally there are chances that normally some materials whatever is there of expired date that may be sent, or sometimes normally the inventory may be recorded something else, and whatever is there in as a physical stock in the godown may be different, or sometimes normally some kind of normally the malpractices may be made by normally the employees or by any other third parties or external parties. So in such case normally it is very important to have a cross check on the same to avoid falling victim to such kind of frauds. Very important thing is this. And third one is to understand the position of your assets and liabilities. Okay, understanding asset liability position is very important. So asset may include normally your fixed assets and current assets. So knowing the position of that is very important. And then knowing the position of liabilities, like your long-term liabilities and current liabilities. Knowing that is also very important for the enterprise there, because there must not be any chance normally to overstate the asset and understate the liabilities. Or sometimes normally you can find that if the borrowings are increased considerably, we can find that the position of the enterprise may also be suspected. That is one side. Or in case if the normally borrowings made by the scheduled banks crosses the limit, normally again it suspects the position of the enterprise. So in such case, normally it is very important to know the asset and liability position of the enterprise, fourthly for income tax purposes or for IT purposes. Okay, so in the case of income tax department, they also prefer normally those books of accounts of the enterprise which are audited, whether it's a small sized proprietorship firm, partnership firm, limited companies, MNCs, or any trust and registered bodies also. They prefer audited accounts itself. So for the calculation of income tax, for the refund purposes, and also for normally any kind of normally the receivables for the firms. So in such case, the most important thing is for income tax purposes, audited books of accounts are normally preferred. So audit purpose is even for meeting income tax purpose. Okay, next one is meeting the requirements of the statute. So as we know that Government of India, when the Government of India also wants the firms to be audited, any firms whose annual turnover crosses above 40 lakhs is subject to audit. It has to be made a compulsory audit. Till then normally we are given an option. That is one side. So any firms which are having normally above 40 lakhs turnover, generally it comes to around 3 lakhs per month, 3 lakhs or so. So in such case, normally this has to be audited compulsorily. Very important thing is this. If the sales is increased, definitely it is subject to audit. Or if the turnover increases, it is definitely subject to audit. So these things becomes normally again this is necessary for making the audit. See, audit is not compulsory as well as not luxury. It is made compulsory only when turnover of the enterprise increases beyond statutory limits. It is luxury only for those who want to see the true and fair view of financial position of the enterprise. So, okay, this is one side. So next one is normally see why this auditing is made normally so serious here. Why? Because normally over the year India has witnessed so much financial scams. Say when you look at normally say 2009, it was normally see the India's Reliance Power scam. 2010 LIC Housing Finance scam. 2011 we can find that there was normally India Bulls Power scam. 2012 Sahara Airlines scam. Like that normally year on year normally we can see that normally again see the lot of financial scams are taking place in the corporate sector. To avoid that and to again make the investors cautious about these kind of frauds, normally again so the auditing has been made compulsory. Audited books of accounts are always genuine in nature, they are authenticated, and we can also trust that. Even bankers also prefers audited statement normally before they fund the enterprise. So what is important to them is they follow the RBI guidelines. According to the RBI guidelines, most important thing is an entity must be in 3 years in existence minimum. And second thing is they must at least provide audited financial statements for 2 years. Audited financial statement includes the profit and loss account, balance sheet, and income statement of the enterprise. Very important. And third thing is normally again they will also cross check the bank transactions. In the bank transaction, normally again when they audit that, normally again so their restrictions are as follows. First thing is inward check returns not above 5, outward check returns not above 2, tangible net worth to total liability ratio should be less than 6, and then balance scorecard should mark at least 55 points. And then apart from that, normally is the turnover is to normally the borrowing ratio is 4:1, which means that if the turnover is 1 crore, the borrowing eligibility is only 25 lakhs. So not beyond that. All these things are there. So to bring in transparency in normally the business position, to bring in transparency in the financial statement of the enterprise and financial position of the enterprise, the auditing is made compulsory. So this signifies the need for auditing. Thank you very much.